Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically now we are discussing about the Banking Regulation Act 1949, okay, which was named as a BRA on 1st March 1966. Prior to this, as we had discussed already, it was known as Banking Companies Act 1949, since it was introduced from 16th March 1949. Okay, and this BRA is basically applicable for the controlation of the bank, and the regulatory authority under the BRA is Reserve Bank of India, right? That's what we have learned so far. All right, so this is just a little bit revision I have provided you. Okay, so if we move forward, this is the index we are going to discuss in this lecture. First, we will have a look upon the objectives, thereafter the regulatory authority, and then the licensing and the operations. Okay, so let's start with the objectives. Some of the objectives we had covered in the previous lecture. Some of the objectives we are going to cover in this lecture. I hope that you have revised the previous lecture before you have come for this lecture. As I have told you so many times, it is for your own benefit. Alright, so let's start. Thereafter, the monetary policy tool is another objective of BRA. Okay, facilitate the implementation of monetary policy in India by granting the RBI authority to use tools such as the cash reserve ratio and the statutory liquidity ratio. Okay, so basically if we talk about the monetary policy, okay, so we know there are two types of policies. The first is the monetary and the second one is the fiscal policy, right? That what we had discussed many times. Monetary is basically vested with the Reserve Bank of India. Fiscal is basically vested with the Ministry of Finance. Right? Monetary basically deals with the flow of money in an economy. Okay. Fiscal policy is basically deals with the description of spending and earning of government, right? That's what we discussed. So basically now we have revised and we had already come to know that the monetary policy is basically handled by the Reserve Bank of India. Okay, and it is about the flow of money in an economy. All right, now I'm going to ask you a one simple question. Why should we check on the money supply? That is the question I'm going to ask you. Why should we check on the money supply? What will happen if there will be an excessive or there will be a you can say shortage of the money in an economy? Okay, I'm just giving you the 10 seconds to think about it. Then I will give you the answer. All you have to do is that when I will give you the answer, just match the answer with my answer. Is your answer is correct or not? Okay, so your time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. That's it. So basically, remember, I had given you this chart, right? Household, then the corporates, then the government, then again the household. We had already discussed this chart in depth. Okay, how the money flow in the economy. All right, So if this is you, okay, you are earning rupees 10,000. All right. So you are spending some money, you are buying something, okay, as per your needs and other things. All right. But if you has increased your income from 10,000 to 10 lakh, what will you do? So if we talk about in a general sense, if we talk about this criteria, then there are basically 3 stages of person increase with income. The first one is increase in the expenditure. Okay. The second one is moderate expenditure. And the third one is increase in the savings. Okay. Like when your income rises, what the first thing you do? You always try to buy things for your comfort, for your need, for your luxury. You will expend money on the things. It means there will be a rise in the expenditure. Okay. Thereafter, after some time, when you buy various things, okay, you become mature. All right. And that is called your maturity level. Like you no longer need of luxury, moderate, luxury, high class things, because you have already bought them. Okay. So your expenditure become moderate. Okay. You just only spend money on your basic needs, some of your luxury needs maybe, but not as much as you were spending in the initial stage. And then comes the third state, which is called the increase in saving. Now it means that you had spended your money on a various things, you got a proper satisfaction, and you are no longer interested in buying the more and more things. So what you will do, you will start saving the incomes. Let's understand it by the numbers. Your salary is 1 lakh rupees. In your initial state, suppose you were making the expenditure of 90,000. Okay. Only rupees 10,000 you were saving. Okay. It's your first stage. In your second stage, your expenditure became 50,000. Okay. And your saving became 50,000. All right. In your third stage, your expenditure just left at 20,000. Your savings are now 80,000. Now you can see, first when your expenditure rise, your salary falls. When your expenditure breaks down, let me tell you again. Okay, it's my mistake. Once your salary rises up, your expenditure rises and your savings falls. Second state, when you come to the moderate expenditure, your savings increase gradually. Okay, because you are lowering down the expenses. And the third state, when you became fully satisfied, there is a increase in savings because you are no longer interested in buy the things. So it's just a overview of the things. Okay, now come to the topic. Why should we check on the money supply? So once the income of the people rises, what they started doing? Come on, I have told you right now. They started buying more and more things for their needs, comfort, their luxury, etc. Okay, and when they started buy the things, what will happen? Demand of items will be increased. Okay, and remember the golden rule which I had told you in the sections of economics, means that when the demand rises, the price rises. So this will be the condition. Okay, and this leads to the inflation. Okay, and we could understand it like, suppose your salary was rupees 10,000 and there is an increase of 10%, which means now your salary is 11,000. Okay, because rupees 1,000 has been increased, but due to the increasement in the demand of the products and the commodities you were buying, there is a rise in the price. And now suppose if the thing was at 10,000 rupees, now the thing has been at 13,000 because 3,000 has been added to the rise in the prices of the commodity. Okay, it's just an example. Do not go for the calculation other parts. I'm just trying to explain you. Okay, all these calculations you could have a better understanding of this in the math section. Right now I'm just trying to explain you how the things happens. Okay, so now if you try to match it down, doesn't matter whether your salary has been increased or not, the inflation has been increased a lot, which means that still, even after rise in the income, your purchasing power will be depicted or not in the accordance. Okay, that's why it is necessary to check on the money supply to control the excess supply of money in the economy. It's the first case. Second case is for the shortage of money supply. All right, suppose this is the person whose salary was rupees 10,000. Okay, his all expenditures were 2,000 and the remaining salary was rupees 8,000, which is he required to spend on the commodities and items which he is required to buy. Okay, but due to the shortage of the money supply in the market, now he is only earning 8,000 and the 2,000 it's his basic expenditure. After that, only rupees 6,000 left with him to spend on the things. Now you can see his purchasing power has been dropped off. And when this kind of things happens, what will happen suddenly? Demand will comes down in the market. And when demands come down, price comes down. And the businesses suffers a lot and overall economy suffers a lot. Okay, that's why it is very, very necessary to make sure the price of the, to make sure the money supply should be controlled in an economy. Okay, we had already discussed these things in the previous lecture in a more detailed way. Now I'm just trying to give you an overview. All right, now come to the CRR and the SLR. What do you mean by them? Okay, first of all, we should start with the definition, which I had already told you in the previous lecture. So I think that you have revised them. You have 10 seconds to think about the definitions and your time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. Time's up. So basically, the CRR stands for cash reserve ratio. All right, and the SLR is basically stands for statutory liquidity ratio. Okay, so this is the definition. Now the another question is, what do we mean by them and what is their use in the monetary policy? All right, so basically, just tell me one thing. Banks are greedy, right? That's what we had discussed so many times, how the banks are greedy. Okay, and what are the implications of it? We had discussed many times. All right, so now let's have a look on the CRR and the SLR, how they work to stop the greediness of the banks and how to help the economy and control the money supply. So basically, first the CRR. The CRR is the ratio of deposit with the bank which has to be kept with Reserve Bank of India. Okay. Thereafter, SLR, its ratio of deposit with the bank which has to be kept by the bank with itself. Okay. So these are the general, you can say, the definitions. All right. Now, basically, suppose if there are 100 crores, these 100 crores is basically the deposit kept with the bank. Okay. So the bank could not lend out these 100 crores as a loan. Okay. They have to maintain it, the CRR, SLR, and the remaining portion could only be granted as a loan. Suppose the CRR is basically 10%. The SLR is basically the 20%. And thereafter, priority sector lending is basically the 10%. Okay. So 10, 10, 20, 20, 40. Total 40% is the reserved. Okay. Which means out of 100 crores minus 40 crores, because the 40% of the 100 is 40. Only 16 crores left with the bank to lend out as a loan. Okay. So this is the chart how the CRR and SLR works out. They basically curb the power of the bank to grant more and more loans and basically increase the money supply in the economy. Okay, like whenever there is a case of inflation and the deflation. All right, so remember, in the case of inflation, CRR is 10%, SLR is 20%, and the PSL is basically the 10%. That's what we have. So in the case of inflation, when there is a high money supply in the market, so generally RBI try to make sure the bank should not be able to grant more and more loan to the public. So they will increase the CRR 10%, they will make it 20%. SLR 20%, they will make it 30%. PSL 10%, they will make it 20%. Now how much it has been become? 20, 20, 40, 40, 30, 70. Total 70%. So it means that out of 100 crores minus 70 crores, only 30 crores left with the bank to grant as a loan. And previously it was 60 crores. So now you can see how they curb the power of the bank. And when the banks are not able to increase the loans supply, so it means that eventually the money supply will be controlled off. Okay. Similar things happen with the case of deflation, but it's just a reverse. Like in the case of deflation, when there is a shortage of money supply in the market. Okay. So what RBI does, RBI generally lower down the CRR, which 20% it was, now it is 10%. 30% SLR, now 20%. 20% PSL, now 10%, which means that now 10, 20, 10. 40% is basically the reserve ratio, which means again the bank will have 60 crores to grant as a loan, because now the reserve is only 40%. not just 70%. So now you can see the power of the bank has been increased to grant the loans. So that's how the CRR and the SLR works. Okay, it's depend upon the condition of the economy, whether there is a inflation or the deflation. According to it, the CLR and the SLR increases or decreases. Okay, I have explained you the procedure. Okay. Now I hope you have got the monetary policy tools, how they worked out. Okay. Control the money supply, influence interest rate, and manage inflation through the regulation of this reserve ratio. Now the interest rate. What do you mean by it? Basically, we had discussed the concept of base rate, right? Base rate is basically the minimum interest rate chargeable on loans. Okay, and below the base rate, the bank could not lend the loan to anyone except the three cases, which were: first is own employees, second is priority sector lending, and the third is against time deposits. Okay, we had discussed these things in the previous lecture. All right. So basically, base rate is decided by which committee? I had told you it was decided by the assets and the liability committee, right? That's what we had discussed. Okay, but generally, what happened during the time of inflation? Not only the CRR or the SLR increases, but base rate also increased by the RBI. Suppose if the 10,000 loan was available at 10% for 2 years, so the total amount payable to the bank was 10,000 into 10 into 2, which means that 2,000 will be the interest. Principal plus interest. 12,000 is the final amount which is to be deposited with the bank as a repayment of the loan. Okay, but in the same scenario, if the base rate has been increased to 30% for 2 years, now the person who has taken the loan has to return how much amount? 6,000. Okay, 10,000 plus 6,000 interest. 16,000 will be the final amount which is to be repaid to the bank as a payment of loan. So now you can see, with the increase in the interest rate, the final amount will be increased, and this will discourage the people to take the loans, and eventually the money supply will be curbed, you can say. All right, this is the first thing. Okay, similarly, when there is a you can say the deflation case. In deflation case, if that was the base rate, the RBI will decrease the base rate so that the people could be encouraged to take the loans and the money supply will be enhanced. All right, let's move forward. Enable the RBI to respond to the changing economic conditions and maintain the price stability as per the case of deflation and the inflation. Now, prevention of malpractices. Prevent malpractices, fraud, and the financial misconduct within the banks by implementing stringent regulations and the oversight. Okay. Enforce Rules that prohibit activities like insider trading, false reporting, and the embezzlement. Now we had found the three words here: insider trading, false reporting, embezzlement. What do we mean by these three words? The first is the insider trading. Second one was the false reporting, right? False reporting. And the third one was embezzlement. So what do we mean by these three words? Let's discuss. So first word we had is the insider trading, right? So now, suppose this is an organization or a company called XYZ. All right, this is an organization. So do you think the XYZ should disclose all of the information in the market about its operation, all the things? Okay, or do you think there will be a questioning of general information and the confidential information about the company? Do you think there should be any criteria like this in the companies? Yes, there is a criteria like this in the companies. Basically, general information is the information which the companies generally provide to the people. People means us. Okay, you can search about it in the internet. You can talk about it in the journal, magazine, newspapers. Okay, it's a general information. Okay, like how the company is doing, it's the profit or a loss, all these kind of things. But the confidential information is that information which basically related with the inside of the company. Okay, like what are the terms and conditions of the employment in the company. Okay, how they are procured the things from the outside, like from where the raw material is coming, what is the price of raw material. Okay, how their system and internal policies are operating. A company will not disclose the information in the open market because it is their internal affair. All right, suppose, okay, that is the person. He is basically the person who wants to buy the share of XYZ. Okay, now assume that person as you. Okay, now you are that person. Okay, you want to buy the shares of XYZ. So you have to access the information like how the company is doing and how the company is going on, what should be the future, so that whether should I invest my money or not. These kind of question will be coming in your mind. All right, now do you think the company will ever declare itself as a loss company, or they will openly say that we are in a loss, we are not making the profit? Do you ever think? No. So generally the journal information which is to be released by the company in the market for general people must be in the praising form. Okay, like they were claiming that we are doing very well and this thing. So this is just a case. Okay, so you could access that information. Okay, but suppose not using your brain, not using skill, not using your research and utilizing the journal information, you have shaked your hands with someone from the inside of the company who having the access to the confidential information of the company. Okay, and you asked him to disclose the information, the confidential information to you. Okay, and then you will invest in the company, and whatever you will earn, there will be a ratio of 80% and a 20%. So do you think this is legal? The clear answer is this is highly illegal, because the confidential information has only the access to the company, not to the outsider. You are not the outsider, you want to buy the share. Okay, and for that you are not using the general and the, you can say, legitimate information. Falsely you have shaken your hand with someone and then you are leaking the company's information for your benefit. This is called the insider trading, or by definition you can say disclosing the confidential information of an organization to outsider for personal benefits is called insider trading. Okay, it simply means that you are leaking the company's confidential information. Okay, so this kind of practices has to be avoided and are banned and restricted by the BRA. That's why it is one of the objectives of the BRA. Okay, so now we have done the one information, which is the insider trading. I hope that you have got the concept. Now the second one is the false reporting. Okay, so now suppose this is the bank. That bank is XYZ. Okay, and this bank is basically suffering the losses a lot. Okay, so every bank must be open to the public about their genuine condition, not to the confidential information like about the company's policy and all the things, but how they are doing, is there a profit, is there loss, so that the people who are connected with the banks and who want to be connected with the bank must be aware about what is going with the bank. Okay, so suppose this bank was suffering the loss of 40 crores. All right, but in the general public, instead of showing the loss, they said that we are having the profit of 40 crores. Now tell me, which is the real news and which is the false reporting? Obviously, this is the real condition. They are suffering the loss, but that is they are telling to the people. So this is the false reporting. Okay, because it is already harmful for the person who has having the account with the bank, because he is not aware that whether the bank is going to be bankrupt or not. He will think the bank is growing. Okay, and similarly the person who want to open his account and want to be connected with the bank will will not give a second thought that whether the bank has been suffering or not, but he will be attracted by seeing the profit. Okay, so it is the second case, like you are giving the false information and hiding the real situation from the public. It is known as the false reporting. Now comes the embezzlement. Okay, so basically suppose this is the bank XYZ. Okay, and thereafter there are persons who have deposited their money in the bank account which worth rupees 100 crores. Okay, but the bank owner Mr. X or Mr. Y, you can say, directly invested that money in his own company, which stands for ABC. This is an example of embezzlement. I know that you haven't got the concept properly, so let me tell you one thing. Basically, if we try to understand the scenario, these people deposited their money in the XYZ. The banks are generally allowed to invest the money to grant the loans, but after keeping the certain ratio for the maintaining of the withdrawing and the lending of the loans ratio. All right, but Mr. X invested the money in the ABC, which is his own company. Okay, without any authentication, like whether the ABC having a sufficient, you can say, profit statutory. Okay, their board of directors are sound. XYZ is willing to invest. If he has surpassed all the things and he has invested the money in the AYC because he was the owner of XYZ and the ABC board. So this is called the embezzlement, or you can say by definition, embezzlement is basically using of money belong to someone for one's need and interest without consent of original holder. Okay, so in this scenario, original holders are these four peoples. That is the money. Mr. X is using their money, which has been deposited with the XYZ, and granted it to the ABC. This is the certain case of embezzlement because he hasn't taken the consent of the depositors and he is investing the money for his own benefit. So now I hope that you have copped all the three concepts properly: insider trading, false reporting, and the embezzlement. All right. Impose penalties and legal consequences for violation, discouraging individuals and institutions from engaging in unlawful activities. As we had discussed, there are the provisions of powers and detailed instructions for RBI to taken in certain cases. All right. These detailed points illustrates how the Banking Regulation Act 1949 seeks to regulate the banking sector to ensure the stability and integrity of the financial system, as we have discussed, protect depositors' interests, promote responsible banking practices, facilitate monetary policy implementation, and prevent financial malpractices. Okay, all the things we have discussed in this lecture properly. All right. Regulatory authority. What is the regulatory authority under the BRA Act 1949? I have told you so many times, the Reserve Bank of India. Okay. So students, basically in this lecture, we had finished with the objectives and the regulatory authority. In the next lecture, we will start with the licensing and the operations. Okay. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.